This program is brought to you by the Kentucky Small Business Development Center in Louisville. We provide the professional expertise, tools, and resources to help you succeed. To connect with a business coach, call 502-625-0123 or email sbdcinfo@uky.edu.
Hi, welcome everybody. I'm Dave Etkin. I am the director here at the Louisville Small Business Development Center. Thanks for joining us for another Toolkit Tuesday. Always glad to see you guys on a great day like today. It's sunny here in Louisville, Kentucky, and a little chilly, but there's the weather report for today. Again, thanks for joining me. And the Louisville Center is part of 13 centers around the state. If you just check us out on LouisvilleSmallBusiness.com or KentuckySBDC.com, you can get access to a lot of resources, tons of other coaches, and pretty much anything you need to help and grow your business. And just as always, just to make sure that you can hear me and see me well, if you look down towards the bottom of the screen there, you'll see a toolbar. And if you don't see one, just bring your cursor down there. It should pop up. And there you'll find the chat feature. If you wouldn't mind just clicking on the chat feature there. And just so I know that you can see and hear me fine, we were just dealing with a lot of tech issues a minute ago. Just type in your name and say hello and tell us where you're joining from. It's always really fun for me and Janet to kind of see where everybody jumps in from. We get folks from all over the country sometime, and I just can't imagine how you guys find us, but I'm glad you do. So hello, Kristen from Lexington, Nancy from Louisville, Kim. Hey, Kim from Winchester, Kentucky. Lily, hey, how are you? Sharon from Paducah, great to see you. They're just kind of joining in here and popping in. So also, as we go through the slides today, if you have any questions or comments or need anything, just type it in the chat there, and Jen and I will be monitoring, and we'll just stop and answer your questions whenever we feel like we need to. And then hopefully we'll have some time at the end to discuss different things. So thanks for joining us today. We've been, this is our second installment of how to use your financial information to make better decisions and more money. So we got a lot of great comments last time, and I hope everybody enjoyed it. Thanks for folks that came last time. Hey, Aminata, I've been meaning to call you, so I'll try to do that today or tomorrow just to check in. So thanks for joining me today. So I'm just going to go ahead and jump in here and get started. And again, if you have any questions or comments, please feel free to just place them in the chat feature. As we go through today. Janet, how are we looking today?
Looks good. Let's go.
Okay. Yeah, so thanks for everybody for joining us. Again, we were dealing with tech issues as always, it seems like, so I'm glad everybody can see. So again, this is our second installment of how to use your financial information to make better decisions and more money. So the big question is, what are we going to do today? So today we'll just do three things, but they're big subjects, big topics. So first, we're going to talk about the top 4 financial analysis tools. Last week, we talked a bit about that, how to look at financial statements. We're going to look at things that you can do a little bit deeper, and then use that information to put together a financial dashboard. There's a bunch of reasons why you want a financial dashboard. This is one of the most powerful tools that you can implement in your business. And then once we do get a handle of all that, we'll talk about creating a business budget going forward. So we're still in January. I mean, this is still a great time to think about doing these things and implement them for 2023 so you can have a really strong year this year. So just to tell you again, this is me, I'm Dave. I'm the center director here. That's my contact info. I'll put it back up at the end also, but if you have any, would like to talk about any of the things we talked about today, or I just love financial analysis and dealing with financials, something I really enjoy. So if you want to reach out to me and talk about it, I'd love to talk to you about it. It's so much fun for me. So hope to hear from you. So there's a few reasons why you want to put all this together and spend time with your financials of your business. And if you remember last week, we talked about this is a great time to make a goal for yourself, to get all your financials up in order and get everything up to date. When you're busy and running a business, I know sometimes keeping a finger on the financials and getting everything up to date can be hard, but it's so key. So please make a point to do that. This is the language of business. This is how we get things done. So please get your financials up to date. And so one of the biggest reasons is thinking about your goals for this coming year, and reviewing your finances provides awareness of goals and new paths to drive your company forward. It's really important to understand those financials and what's great about them. Business goals avoid what I call tunnel vision, and that is where you are just in the day-to-day whirlwind of your business, and you're not taking time to step out and drive your business in a strategic way. All you're trying to do is get through the day and get things done without any thought of why you're doing those things. So business goals are really important for that. And the more you know about your business, the more you can grow. Oftentimes, and I've been guilty of this myself, is just thinking through that more sales equal success and more profit. And that is not always the case. So the more you know, the more you can grow successfully and profitably. The fourth reason is you can choose your own destination. It's really crazy, but sometimes understanding your business helps you to make those decisions that on the surface seem somewhat irrational, but are actually a great decision and great for you. Just as an example, I was working with a company who was not very profitable, and once we analyzed all the financials and came up with a plan, the plan was actually to get rid of some of their biggest customers and shrink their top line revenues down by almost 30%. And the weird thing about that, and once he made the decision to go down that road and choose that destination, they immediately became profitable because some of their biggest customers were a drag on their business. So by getting smaller and understanding their customers and realizing what they needed to do to be profitable, really changed the makeup of that company. So that is the last reason. You want to gain control of the trajectory of your business, where you want your business to go. So those are the 5, really high level reasons to, review your financials and set business goals and understand what's going on. So let's start with our first goal today and go through the 4 biggest tools, or the best tools, to analyze your financial statements. And we looked a little bit of this last week, and it's called horizontal analysis with your financial statements. So if you recall, last week we had some example financials, and I hope you can see this. I tried to make it as big as I could to get it stuck on there and still make some sense out of it. So I apologize if you can't. And we will send you these slides later on today so you can have them and take a look at them. But oftentimes, if you're getting financials on a regular basis from a bookkeeper or an accountant or something, they'll send you the activity for 1 month. And this is what you'll get. So you'll have your sales at the top, less your cost of goods sold, your gross profit, all your expenses, and hopefully some sort of profit at the end. But the issue with this is, and as we've talked about a lot, is these are just quantities. They don't tell you the quality of the business. They don't tell you the quality of the financial activities of your business. So we need more information to compare and look for trends and look for things. So this is step 1, is to expand our financials. And so we would put our financials in up against others. So this is a comparative financial horizontal analysis of 3 years. I recommend you do what's called a rolling 12-month, where your financials consist of 12 columns with 12 months on it. And each month, the new month, when you added a month, you drop off the last month. So you're looking always at a 12-month snapshot. And I was going to put one up here, but the numbers were so small, probably not a good idea. But as you can see, you can look at these numbers and you can just scan across the lines horizontally. That's why they call it a horizontal analysis, and see certain trends. So it looks like our sales are going up. The gross profit is going up, all good things. We have some increase in total payroll. Our total operating expenses are going up. Our net operating income has gone up. Our net profit after tax is increasing. So this on its surface looks pretty good. So this is our first step, our horizontal financial analysis. We lay things out side by side. We scan across those lines horizontally. The next thing is this is one of my favorite things to do. It's called common size analysis. And this allows you to do a bunch of things, but it's very easy to do, especially in QuickBooks. So what we would do is we would take our financials, and here they are, our comparative financials. It could be 12 months or, with 12 columns or 3 or 5 years, whatever. So we start with this, and then it's so easy in QuickBooks. All you do is check a box, and it will add another column with the percentages. And you recall from last week, we've looked at this a little bit. This is a way to kind of give us an additional insight into how our expenses and revenue relates to one another. This is the creation of the business model, the interplay between the income and outgo of business expenses and income. So what we want to do in common size is to pull out the numbers and just look at the percentage relationship of our financials. So with that, we just pull all the numbers out and just have the columns with the percentages. And it tells us a lot. And if you look at these trends, we can see that a lot of the numbers that were, look on surface on our first analysis were increasing. In essence, they were increasing from a dollar standpoint, but they may not be so favorable as it relates to the percentage of sales. So I always like to think of our top line sales where it's 100% as a dollar. It's an easy way to explain these things. So on our sales category, so it just tells us that we have 100% of sales less our cost of goods sold, which is 50% in 2020, and our gross profit was 50%. But what that says to me is that for every dollar I sold, it cost me 50 cents. I got to keep 50 cents. And I use that 50 cents I get to keep it to pay for all my other expenses on below the line. So as you can see here that our percentages, we can look horizontally across our common size statements and see that from an owner standpoint, as a percentage of sales, my compensation has dropped significantly. Salaries have gone down. Our operating expenses, total operating expenses, as you can see, even though from a dollar standpoint, they went down somewhat, from a percentage standpoint, they have increased significantly. So that's 40%. So every dollar I sell, 40 cents of it has to cover all my expenses, which means there's only 10 cents left over the net operating income to cover some other items that fall below the line. So you can see how important this is. It kind of tells me some trends and some relationships that even though it looks like my sales are going up and things are going up, it's actually, there might be some things that I want to drill in here. And just to reiterate what we talked about last week, when we do these things, what we're looking for is we don't really need to analyze every little line for the most part in this, but what we want to do is find some bigger trends, some bigger changes that we want to drill down into and see what's going on and see if we can affect them in a more positive manner. So we can really add one other thing on here, and this is the third tool, and that is benchmark analysis. Now, a benchmark is where you find data on your industry from other sources, from databases, or maybe a industry association. And these are studies where financial statements are collected and analyzed and compiled and put together as an average. And, these associations or companies will make this data available. Sometimes you have to pay for it, sometimes you don't. We do have a database here that we'd be happy to access for you that has some of this information. The Louisville Free Public Library has this information, or you can just Google industry benchmarks or averages for your particular industry. And unfortunately, though, it's not available for every industry. So if you're in a really tight niche of a business, most likely there's not a lot of information out there, since the number of companies that would be really reporting this up probably doesn't exist. So keep that in mind. So let's just say we went to a database and we found some industry benchmarks. What we could do is just add another column to our analysis and place this in. And since our industry compilation would be from big companies, little companies, they would also be using a common SAS format, which is percentages. So if we look at our industry and compare it to our most recent year of 2022, we can see that the industry as a whole, our benchmark numbers show that our cost of goods sold for the industry is significantly less than our cost of goods sold. And their gross profit is significantly more than ours. That gives us an opportunity to really understand our cost structure, our pricing structure, things to look in for that matter. So right there's a red flag that we want to look at and see what's going on. As we scan down from an owner standpoint, I see that on average, an industry owner can expect 7% of sales compensation as opposed to my meager 2%. So of course, I'm going to look at that as an owner. And going down to the bottom, the industry as a whole has total operating expense of only 36%, and I'm at 40%. So that tells me there's a 4% opportunity in there somewhere if I can figure out what these other folks are doing. So you can see how important and valuable this is as a way to find some opportunities. And this is part of your annual business plan almost, to look at these numbers and figure out what you can do to improve them in that manner. Oh man, I forgot this. Darn it. My bad. Another thing that's the part of this that you can analyze is ratios, and ratios are really fun. There's some standard ratios, or you can make up your own. I make up my own ratios all the time. So ratios are just a comparison between financial statement numbers, two of them. A lot of industries have their own ratios, and it's part of the industry jargon. And the restaurant business, there's check averages, or sales per square foot in retail, and hotel, it's RevPAR, or occupancy percentage. And ratios are easy to use to measure the health of your business. And you can also use ratios to be looked as forward-looking, to predict the future almost. So perhaps, I don't know, some sales calls or unique visitors to your website. These are all ratios that you can put together to kind of predict your future sales or activity. So from a financial standpoint, there's four main groups of financial ratios. First is the liquidity ratios. And liquidity ratios measure the company's ability to pay short-term expenses. There's several of them. We'll look at a few of them. Activity ratios, these are how the company measures its use of its assets, the things that it has on hand that generate revenue and profit. Third is leverage ratios, and this is the ability of the company to pay long-term debt. And again, this is almost a predictor ratio. And then lastly, there's the profitability group of ratios, and that is a way to measure your return on investment, the profit. Is it your company a good investment to you as an owner? So again, as we have said several times, you just can't have just one number sitting there, because doesn't tell you the quality of the number. It just tells us the quantity. So we have to look at the trends, even in ratios. We have to calculate ratios for different periods, different days, whatever makes sense in part of you. So I have a little report card that I use often for company analysis. This one's a little bit easier than some. Let's take a quick peek. And so what we would do is calculate these ratios. There's the formulas in the second column. And just to point out a few, if we were working backwards and trying to predict what we're going to do in 2023, we would gather this information, calculate it. So I would want to know what my working capital is, the amount of money that's in essence locked in my business as part of the cash cycle. The current ratio is so important, especially from a banking standpoint, and that is the formula there is there for you. But what that tells you is how much cash is on hand to quickly pay debts, all of your short-term debt. So back to my dollar analogy, which I always use, I would look at, so in the first column, it's the current ratio is 1.7, then it drops to 1.1. That tells me that in ratio speak, for every dollar of debt I have a $1.70 to pay it in the first column. In the second column, I only have $1.10 to pay it. And then again, we can get these benchmarks. An industry benchmark is 1.8 or $1.80 to pay that debt. So these are different leverage, these different ratios that we can calculate. All those formulas are there. Some are appropriate for some businesses, some aren't. Some businesses are just small enough that some of the things don't really matter. I just want to point out another thing. Down in the activity ratios, things like inventory turnover or inventory turns divided, with days. This is a great way to really manage inventory and in its relation to sales. Inventory is just $1 on a shelf that you can't spend. And so if you can understand the relationship of your customers and your inventory and really work on a just-in-time inventory method, you can really free up a lot of cash by using this. And so, what we would do with this report card, we would do just like we did earlier in our other analysis, is we would, add another column there and then compare it to benchmarks from the industry and look for opportunities to make improvements and put together a plan on what we're going to do going forward in 2023. Just that simple. So if you'd like, I can send this to you with the slides today, and I'll send this over to Janet. She can help us out with that. So once we've done this analysis thing, and we'll talk a little bit more about this, but we want to build a financial dashboard. We want to get the dashboard put together fairly quickly. So let's just talk about that for a second. Small businesses are unique in a way, and they operate very fast, and you can't really wait until the following month, mid-month, before you get financial information to make decisions, because something may have happened at the first of the month. You can't wait those 6 weeks to get information to understand what had happened, whether it was good or bad. So, for example, if my supplier raised the prices on me, but I didn't catch it, I wouldn't be able to see that until my financials came out, where I noticed my cost of goods sold went down. So getting regular financial information and putting it on a dashboard is really key. There's kind of 4 keys that I think to success when you are working with a dashboard. And we've, in essence, done step 1, and that is to step back and look at, what's going on, the financial analysis. We would figure out our priorities. I've mentioned it several times. We look for big opportunities or red flags on our financials. We put together our priorities the ones we want to use. We use this data to track to make sure that our plans are working in a positive manner. And then we look at it again and start all over again and do this on a regular basis. So let's take a look at quickly these little steps here. So on step back, get the big picture, we want to look just what we did. We did the financial analysis and picked out some priorities. We can also do some other things like customer surveys, employee surveys, SWOTs, competitor analysis, look at our aging. These are all things that will help us get an idea of what we want to do from a financial standpoint and putting together priorities for our business. And those priorities are important, and you can't have have 100 of them. No more than 3. That's a lot. We, as humans, have a hard time multitasking, no matter what anybody says. We can really only manage 1 or 2 things at a time. It's the same with any organization. So make sure that there's no more than 3 priorities that you've picked out at any one time. We want to pick out a period of time. Let's say these were the next priorities for the month or the quarter. I like to work in quarters with priorities, and then prioritize the priorities. So we will focus on our top priority and put all our efforts into that before really moving into the second priority. And then, again, review quarterly, and then make sure that you put together a big goal as part of that. And then using our dashboard that we'll talk about here in just a minute, we use that to keep an eye on and track your progress. So what gets measured gets done. Just by tracking things on a regular basis, then generally the numbers will improve, oddly enough. So and then the rhythm is the natural sequence of meetings, or when you review your dashboard with your team, whatever that is. And that's when you reassess where you're going with using the data, and then reassess and then make plans and adjust your goals going forward. So that's a process that you're continually working through. So putting together a financial dashboard, I mean, it sounds daunting. What does it look like? How does it get done? I mean, there's a couple ways to do it. But what we want is we want facts at a glance on one page, and we want that to come out at a regular time. So if you are a company of one, maybe your dashboard is a piece of paper with some columns on it, and then at the end of the week you would write in some numbers that are important to you as part of your priorities. Maybe you export a little bit of data from your financial software, whatever, and then you just build something in Excel. I've done that a lot too. I'll show you a couple sheets that I use sometimes, and then there's things that your software can do already. We'll look at a little bit of that. So here's just an example of a dashboard that I like. And on the left side, just different measures that are important to you, and on the right hand side, it's almost a comparative balance sheet of everything that you would think you would need to know. Your how much cash do you have? Do you have your inventory, your aged receivables and payables? Who owes you and how much do you owe? And then lastly, at the very bottom where it says liquidity, this is really tells you. I like this one because it really tells you what's left over if you, on that day, you decide to throw up your hands and close your doors and pay all your bills and walk away. Would there be any money left over? And that net liquidity number, if you have a positive number there, then your business is in decent shape almost. So I really enjoy using this one. But again, it takes a little bit of work because it's stuff you have to enter on your own. But oddly enough, the act of doing this analysis really helps you understand your business and helps you make decisions. Here's another one from a restaurant that if you look in the left column where it says goal, I mean, this is the target percentage that you're trying to get to based on their company goals. And so, they calculate those things out and gives them something to work for. So these are all, there's no right way to do it, just things that you are interested in or think that's part of your priority or what you want to drive for your business. If you're using QuickBooks, I mean, QuickBooks has a feature, a dashboarding feature, KPI. So you can put together a dashboard there with just setting a few things up. These are pretty slick. I kind of like that. If you haven't been using Xero, this is a software I kind of enjoy. They have a great dashboard feature as well that works decently, and you can automatically, have an automatic report generation on some period. It's like if you're going to meet on Monday mornings with the team, then Xero will pump this out for you on a regular basis. And then another good software package that I've really been checking out lately is MYOB. So it's manage your own books, and it's pretty easy, not too expensive, but they have kind of a cool dashboard. So you can set that up anytime you want. If you do have, you don't find that this is good enough for you, there's a few apps that I like too that you can bake on things. So some of these, here's the three that I kind of enjoy using. These apps have a bit of back-end AI built into them. These are things that QuickBooks and some of the accounting software don't have, and some of them have predictability indexes. So the three are Futrility, Fathom HQ, and Spotlight. So let's look at some of the output here. Futrility has a back office AI that helps predict what's going to happen based on previous trends. It's pretty slick. And Fathom has a great add-on app where it also has projection capabilities as opposed to some of the other software, the accounting software, that they don't have that. And then here's the output for Spotlight. It has a bit more layout features that you can use to kind of customize your dashboards for your team. So those are the things that you can add on. And again, the most important thing is what gets measured gets done. So figure out a way to get the data, to drive your priorities forward, and then analyze and report on that data and check for trends on a regular basis. Those are the important keys in any dashboard.
So Dave, we have a quick question here from Nancy in the chat.
Okay. Hey, Nancy.
So she says she's not sure how the dashboard works for a business that, while functioning year-round, is somewhat seasonal. So for example, she has fixed expenses year-round, but income comes mostly in 4 to 5 months scattered around the calendar year.
Yep. So just, thinking out loud, I mean, as I said, there's no right way, there's no wrong way. It is what works for you. So if I had a seasonal business like that, my dashboard would focus on things that are important year round. So on my down season, I would want to measure things like customer engagement or customer acquisition for the upcoming busy season. So you don't just stop and not do anything, but these are things that that you would look at, I think. That helps you see if you're making if you're going to have a good season, I guess. So again, it's hard to explain, but well, it's not hard to explain, but it's just I think if you have certain priorities, you would measure the activities to get those priorities forward, Nancy, and then there you have priorities all year long. You do things in the off season that positively affect the busy season. Those are the things I would measure, and then if you can improve those, especially if you can find a measure that if you improve it in your down season, it predicts that you're going to have a good up season. Those are the things that I would measure and put on a dashboard and watch those things on a regular basis. I hope that answers your question. You can always reach out and I'd be happy to chat more about it. We can do some brainstorming, come up with something. Is that it, Janet?
Yes.
Okay. And then as we kind of head up to the top of the hour here, the last step here is creating your business budget. And this is where we use everything we've learned and explored over the last part of this with doing our horizontal analysis, our common size, looking at benchmarks, and putting together a dashboard based on those priorities. And then as part of those priorities, we need to put together a budget for our business going forward. And, a lot of businesses just don't use a budget, because it's really, it's a predictor and it's difficult to predict the future. Or maybe your books aren't in super good shape and it's difficult to, to get that information. Again, that's a goal that I would want to have for you this year. Often people just start, especially with everything we've talked about. It's in January when everybody's got strong willpower and we're going to change and do what we need to do. Just like going to the gym, gym membership fall off at the end of February, early March. So we want to make sure this becomes part of your company culture going forward. So here's the step one of a business budget, and that is to make sure you get good information. Go through everything, kind of check it out. Really, you as the business owner need to understand your financial information. You need to understand and make sure that everything's entered correctly, and it's data that you can rely on. And this is what we've just done. We need to review our historic information. We need to, look at all our reports, understand what's going on. We can customize our P&Ls that help us make better budgeting decisions, and we can ask our our bookkeeper to do that. Or you can also have what I call a business owner P&L laid out in QuickBooks, so you have a different report layout. And this is where you have different views of the same data, where things are categorized in broad categories, so that I've seen P&Ls from companies out of QuickBooks that are 4, 5, 6 pages long, and every little category is just a long list of expenses, and it's hard to make sense of it. So if you can categorize things in this business owner layout where it's in, high categories, things are rolled up. So this is, if you have a bookkeeper, work with them to talk about this and, come up with a format that you can use for budgeting like this. And here's the process here in a way. We're just looking high level as our starting point. We want to flip the P&L and start really at the bottom at net profit, and then look at our expenses, our cost of goods sold, and then finally figure out what we need to hit on our revenue. So let's dive in here real quick. So what we want to do is we want to figure out what our profit should be first, what we want to make for the coming year in a profit. And that's how that's how you can back budget by starting with this. Make sure you have a salary in there as well. Next, we want to move up to our operating expenses, and these are the normal expenses. You want to kind of dig into these, look for some reductions, see what can be done there, make a list of things that you want to look into. Just all our typical expenses. This is a good time especially if you have annual contracts coming up, to review those, or insurance renewals, things like that. And then understand our cost of goods sold. Maybe we need to adjust our prices, or is there a way that we can find different suppliers, things like that. Dig into that. And then lastly, we need to figure out what our revenue is needed to be to support our budget, including the profit that we want to make. So, we have all we do is we add our target profit with our operating expenses plus our cost of goods sold percentage, and that tells us what we need to make. So here's how we do it. We start with the net profit that we want to make, our goal profit. We estimate the operating expenses. We talked about that. We estimate our cost of goods sold, and then we use that to determine our revenue target. If you joined last week, thank you. We talked about how to calculate a break even. This spreadsheet here is a great way to calculate and use to figure out what that revenue needs to be. So we would just put in our profit in our monthly fixed costs, and it will tell us what we need to hit from a top line revenue. What we would then do, we would figure out what our gap is. So once we calculate our revenue target, we would subtract it from last year's revenue, and that tells us what our revenue gap is. Is that realistic? And what will our strategies be to close that gap so we can hit that revenue? So for example, if we have a revenue target of 550,000 and we did 411 last year, that means we have to increase our revenue this year by $139,000. Could be daunting, maybe not, who knows? So, the first step is we drill down to our expenses again, figure out what we need to do to maybe reduce that somewhat. That helps reduce our revenue target. And then look at our cost of goods sold, understand how that relates to our expense structure. Again, if we can reduce our cost of goods sold, that allows more cash to fall down below into the gross profit, which allows us to have more cash on hand to pay our expenses. And make sure that if you're going to have to grow your revenue by $139,000, make sure you have enough resources to hit that revenue target. Do you have to hire more people, or increase wages to keep who you have, add contractors? Make sure you can do what you do, and then finalize your budget. You can use QuickBooks budgeting function in your accounting software, but then as you get reports going forward, make sure you track your budget versus actual in your P&Ls. Here's some helpful tools for this that you can use in addition to your budgeting software in QuickBooks and things. And then I think that is it, Janet. So there's my contact information. Be happy to talk to you about this. If you hover over that QR code there, it'll take you to our Coach Connect page, where you'll be able to connect with one of our coaches and get on our calendar. You'll see our calendars there, and be able to schedule a Zoom meeting if you'd like to talk to one of us, talk a little bit about this. So just to recap, it's the step one in your beginning year review is to review your financial statements, do trend analysis, do horizontal trend analysis. Look, and again, with QuickBooks, you can easily create a common size statement with your different, you can do it by the month or have years lined up. Look for the relationships that stand out and things that you can change for the better. Look for some industry benchmark data that you can benchmark your financials against. And then once you do all that, put together some sort of dashboard that you can use to review on a regular basis. I recommend a weekly dashboard production and review meeting. Again, your dashboard doesn't have to be a ton of different things. It could be 1 or 2 data points. But again, as I keep saying, the most important thing is to track these things, look for trends. Your strategies should improve those things that you're tracking. And if they don't do that strategy anymore, do something differently. And then create a budget for the upcoming year. It's super important to have a budget and plan for expenses, capital expenditures, things like that. So with that, is there any more questions, Janet?
No, but I dropped your Calendly link in there. So if folks want to meet with you one-on-one via Zoom, they can do that as well.
Okay. Yeah. So again, there's just not me here. I mean, there's 3 of us, 3 other coaches here that you can tap into in Louisville. We do Zoom meetings for the most part. We can do some one-on-ones personally also, if you like, but Zoom is pretty easy and everybody seems to use it very well. So you can see our calendar, jump right in there. So just use that QR code to get to that page, our Coach Connect page. Let's see. Right. I guess that's it.
Yes. I think that's it for today. Thanks very much, Dave.
All right, Jana, thank you so much. And thanks for joining us for another Toolkit Tuesday. I guess we'll see you next week, next Tuesday, and enjoy your Tuesday. Thanks for joining us. See you next time. Bye-bye.